I think it's very clear that President-elect Trump has got an agenda around infrastructure spending and around tax cuts, which is very likely to get through a Republican Congress. And to that extent, you get an immediate fiscal stimulus that clearly favors certain sectors in the economy, around construction. Maybe you can argue issues around healthcare and maybe finance. At the same time, this is also an inflationary program. I mean, let's be clear, US inflation was already running in line with its long-term averages on most measures, and now you're adding to that at a time of relatively full employment. This is going to be adding to inflation, and I think that's now being reflected, at least in the early stages of reflection, in the bond markets.
So is it legitimate that we see the bond yields rise, but perhaps surprising that we see the dollar strengthen as well? Should the dollar be weakening in this light?
Well, I think the thing is that what we had from the President-elect yesterday was a rather conciliatory sort of victory speech, carefully scripted, where we didn't hear anything about trade protectionism, we didn't hear anything about American isolationism. And I think markets, desperate for any kind of guidance, sort of seized on that with both hands. The thing is, I think as we move forwards, if we start to see more questions about do we get punitive tariffs against China, against Mexico, do we see more restrictions on trade, do we get the renegotiation of NAFTA that Mr. Trump has proposed, that is likely to start doing some damage to the dollar. And as the inflation numbers actually start to come through on the back of the fiscal package, we don't have any details yet, but as they start to come through, I think that too is likely to do damage to the dollar. So it's a mix of concern about the capital flows that the United States needs to prop up its currency, combined with the rising inflation environment in the United States, is likely to undermine the dollar over the medium term.
Beyond the trade risks, the other one that investors tend to cite are geopolitical risks, rising uncertainty when it comes to U.S. relations with countries like Russia, what's happening, what continues to happen in the Middle East, rising threats of terrorism. How do investors grapple with those kind of risks?
Well, very badly is the honest answer. I mean, investors have never been very good at pricing in geopolitical risk in an ordinary sense. And this, I think, is a significant pivot, if we can borrow a phrase from the current administration, in as much as if you look at Mr. Trump's track record as an individual, he has been strongly opposed to America playing an international role. He's essentially been an isolationist in foreign policy for 30 years. And is very, very much on record as saying this. So quite what that's going to mean, do we see a rise of regional powers? For example, now that it seems quite likely that the Trans-Pacific trade deal is dead, does China step in and create its own regional trade deal and therefore sort of cement its position as a regional leading power? What happens with Europe and Russia in an environment where President-elect Trump's relations with Russia and with Europe are likely to be very different from the current administration? Yet markets just haven't begun to grapple with the implications of this.
Paul, when we look for specific political event risk, how significant is the Italian referendum on the 4th of December?
I don't think the Italian referendum itself is particularly significant. I mean, I think there is a 50-50 chance now that we see the government losing the vote and resigning. But really, does yet another change in the Italian government come as a shock to financial markets? Probably not. I mean, one can question what the government may achieve, but the Italian government is something which changes fairly frequently. I don't think that's the risk. I think actually markets probably look ahead to France, to Germany and to the Netherlands next year rather than Italy this year.
So, Paul, final word on, we'll pin you down here. There have clearly been some winners and losers in the markets across assets and within sectors from the President-elect Trump and Republican-controlled Congress. What would you say is the biggest winner and the biggest loser?
I think that the biggest winner is an inflation protection story. I think that is something which is very, very clear at this stage. In terms of where we're looking for losers, that becomes very difficult because we are uncertain about how much of candidate Trump's policies translate into President Trump's policies.